I mean, like you mentioned, we saw the market come down a bit by 0.77%. The index lost, and we saw a lot of profit taking, especially in the banking stocks. As you rightly mentioned, the last 6 days we've seen positive rallies in the market. People are reacting to the good news we've seen in the results of the banks that have been released so far. But today, a lot of investors felt it was time for them to take profit, and that led to a decline in the index, especially the banking sector.
All right, of course, and we know that Dangote Cement, flour mills, were one of the losers today, and of course, Mobil, which is in the oil marketing space. And Oando released those numbers that Samantha just discussed. Profits down 20%, not entirely surprising given what we saw in the first quarter. But your thoughts on that particular result and the impact that you think it's having on that sector? Because we did see Cornell release numbers yesterday, which were a lot more positive.
For Oando, I mean, the results released today were a bit disappointing. Yes, we had received the news of the profit warning earlier in the year, but investors generally expected that perhaps there should have been a correction right now. So a 20% dip in the profit before tax was really shocking to investors. We wait to listen to the company to explain to us what really happened. But if you look at the numbers properly, you'll see that there was an increase in the turnover, and the dip in the profit after tax was just about 3.64%, which wasn't as high as the dip in profit before tax. I think we need to wait and see what the company will have to explain to us to be able to analyze the numbers properly.
All right, so while we wait for clarity from the company, your thoughts on the dynamics we're seeing in the fixed income market and, of course, equities. We know foreign investors are generally big players, particularly in the equity space, and significant players also in the fixed income space. Has there been, to what extent will you say there is a change in dynamics towards equities? Because we've seen a very strong rally over the last 2 weeks.
We are still seeing a lot of foreign participation in the equities market. At least today we still saw, from our perspective, about 65% foreign participation. We've been seeing a lot of participation of the foreign investors in the fixed income market as well, and especially with the aftermath of the bond issuance yesterday, we saw a lot of them trying to take positions in the long end of the curve, especially the January 2020 bonds, and that led to a reduction in the yield by almost 15 basis points, I mean, compared with the auction result that we had yesterday. So we are still seeing foreign investors being active in the market, the equities market and the fixed income market, and we think this is good for the economy.
I mean, you just spoke about the decline in yields today, but of course, at that auction yesterday, we saw the yields shoot up significantly, if you ask me, across the board, 5 years, 7 years, 10 years. We've seen yields now firmly above 16% for most of those bonds, but now you're talking about a decline today. How come we've seen such a change over the last 2 days?
I think it's because, I mean, yesterday we had sort of an apathy by foreign investors in the bid auction that we had yesterday for the bonds. But today, a number of them felt perhaps maybe they missed out on a sizable yield, and they tried to get in today to get a piece of the action. And that led to the rally we saw and the dip in the yields that we saw today. But we think also that, I mean, this is not entirely sustainable. I mean, we think there's still going to be additional interest from some quarters, and some people will be ready to offload as time goes by.
So you anticipate that yields would continue to go down? Of course, we know that the MPC is next week, and that's something that a lot of debt investors will be looking at.
Yes, the MPC is next week, but the consensus by most analysts is that there will be a rate hike. It's most likely going to be stable. You know, and given the fact that the foreign exchange also experienced continuous depreciation, especially this week, compared with what we saw last week when we had an appreciation, given the huge FDI inflows we had and the huge sale of forex by the oil companies. We've not seen so much this week, and demands have been consistently high. So we've seen the FX market actually depreciate. The Naira depreciated to 161.70 at the end of trading today, from 161.10 that it opened.
All right, let's move back to the equity space. And as we noted, the market was down today. You are alluding to the fact that this is all about profit taking. We've seen the market rally significantly. What do you expect going into tomorrow's session?
I think it's going to be the same as what we saw today. We expect that there will still be continuous demand, and especially at the longer end of the curve, the 2020 bond especially, and that may lead to continuous depreciation, I mean a continuous reduction in the yield. So we're forecasting that maybe there will be another 5 to 10 basis point dip in the yields.
Okay, I was actually asking for a perspective on the equity space, but clearly you were talking about fixed income. But thanks all the same for your perspective. Akeem Oyewale, Head of Global Market Sales at Stanbic IBTC.